One final thing to leave you with is I've been looking at and tracking the correlations between the dollar yen, the 10-year, and the S&P, and it's unbelievable what we're kind of seeing here. And give me a moment for it to all come up. We bring it over. We did talk about this morning. There we go. Talked about this a little bit this morning, but you know, I've been watching very closely these three, and it's so fascinating to see them all moving together because S&P, which is the S&P, which is blue here, and the 10-year, which is purple. It's actually an inverted 10-year. It's fascinating to see rates rising with S&P rising, and of course dollar yen rising as it should. But what to me, in just the last 24 hours, we were talking about the divergence that's occurred in, and I'm going to line them up here so you can see. So we can see precisely when that divergence, occurred in the dollar yen and the 10-year. We had, the dollar yen here. They were together, down, together, up, kind of sideways, and then all of a sudden they split here. The dollar yen headed lower, and the 10-year headed higher. And then look what happened today. They converged right back to each other. So we have them coming back together, and the S&P then getting a bid once they started converging back together, and that was right here. So the divergence was for a very short period, and it was fascinating to see that the dollar yen was tracking with the S&P, and then all of a sudden, once they all decided to come back together here, is immediately when we got the S&P bid. So I'm going to continue to monitor this. This is fascinating to me to watch this dynamic play out in the market because it's looking like this carry trade, the yen dollar carry trade, is where it's at. And when I've been saying bonds are dictating everything about this market, this is what I mean. It's all about the cash, the real cash flowing, out of Japan, out of the yen, into the dollar, which is obviously flowing into the U.S. market. And so I'd be willing to bet if you looked at the Nikkei is probably coming down a little bit because you're seeing very likely Japanese investors exiting Japan, moving into the U.S. here, and both into our bonds and into, Japanese lending money here in the U.S. versus, through various methods, and of course investing in our stock market because, I mean, the correlation here is staggering. That all three of these have moved very clearly together here, and I'm sure we can go and find other correlations and other forex crosses that are showing real money cash flows into the U.S. market. In other words, if you're seeing a correlation like the euro yen, you're seeing Europeans going and borrowing and then investing in the U.S. market. That's what you're seeing, when you see the euro yen carry trade correlated like 98%, I think, today with the S&P. I mean, it's incredible that you can find exactly what money and who's investing in our markets at this time. And what I think personally you're seeing a lot of non-U.S. Investors in the U.S. market, and this is probably, unfortunately, one of these is going to win out in the long term. Because I'm not sure how this daily looks, but there it is. And when you look at this daily, the correlation historically, you can see how both the 10-year and the yen moved together to a low and then have rallied together. But if you look, there's a period here that it wasn't until September of, we'll call it sometime here in 2011, where the S&P was completely inverted to these. In other words, this is the normal move, and then all of a sudden, all three started rallying together, and it was sometime in this period I want to look back, but something dynamically and fundamentally changed, sometime here in 2011, and maybe it was one of the quantitative easing announcements, but something happened here. Something fundamentally changed that inverted the S&P's correlation with both the dollar yen and the 10-year, that has caused them all to rally together. And I'm going to be doing a lot more investigation into this to try to figure out kind of what we're looking at. But I find this absolutely fascinating to see how the correlation completely inverted sometime in this portion. I'm not entirely sure. It looks like it was the lows, and I think this is actually the Bank of Japan started. The intervening of the Bank of Japan was probably the moment. Is probably these dollar yen lows when it all started swapping. You probably had Bank of Japan intervention into the currency, and then Bank of Japan potentially helping the Fed buying up a buy up of the S&P, the plunge protection crew, as it's called. So this is a game of, what I'm seeing is a game of Bank of Japan versus New York Fed quantitative easing, and whatever, I'm assuming it was probably Japanese monetary policy that changed right here at the lows, or they're intervening in the dollar yen, and either through their bond market or otherwise, or directly through currencies. This is definitely where the inversion reversed, and we had all three rallying together. And this is real U.S. dollar growth, because you're seeing that real non-U.S. dollar investment in the U.S. market, in my opinion. And so some interesting fundamentals to talk about, the long-term correlations here, and the correlation has always been between the 10-year, between U.S. bonds and the currency. The S&Ps has changed, and it'll be interesting. And it's not sustainable, unfortunately. At the point at which the Fed hikes rates, that's when I think you're going to see the swap of this. You're going to see the S&P then invert itself again, and that moment of time, that trade hasn't occurred yet. We're not there yet. So with that being said, I think kind of a cool stuff to watch. It's, you can't really trade it. It's way too much risk, but I think it's important to note what these three markets are doing together. So that being said, everybody, have a great day. Have a great, safe weekend. Going to cancel the Aussie US dollar orders for our trading room. We're still actually looking to take that short as an intraday signal, but very likely we'll be looking to enter into that trade sometime next week, because doubtful we'll get it today, but we could. So have a great day, everybody, and we'll be back with you as price action develops.